Hey folks, Dan Frio here, the rate update. Happy Veterans Day for you out there that are veterans. God bless you. Thank you so much for watching. My father who just passed, he was a World War II vet, loved him to death, 91-year-old. Salute you, buddy. I didn't post yesterday, as you guys know, and I'm going to catch you up today. Yesterday was brutal, to say the least. So don't go away. We're going to go over what happened yesterday. Markets are closed. I'm in today because I'm trying to keep you guys current on what's going on in the markets. So don't go away. We'll be right back. Sorry about not posting yesterday, but it was a crazy day. It started out with this.
Rick Santelli is standing by at the CME in Chicago. And Rick, take it away.
Yes, lots of data points coming out here. Of course, initial and continuing claims because of Veterans Day holiday tomorrow, 267,000, a post-COVID low, if only by 2,000 versus last week's 269,000. That may still get revised. Let's move along. With regard to continuing claims, a little different picture. It didn't move up much, but it has moved up from a post-COVID low last week of 2,105,000 to 2,160,000. On CPI, holy cow, hot, hot, hot. Even the headline is hot, up 0.9%, up 0.9%. And of course, that really is much bigger than the 0.6 expected. Strip out the all-important food and energy, up 0.6. That's 0.2 hotter than expected. And we jump the broom on the handle here. Year over year CPI, 6.2%. 6.2%. That's the highest since October of 1990 when it was at 6.3%. And it's the 6th month in a row of 5% or higher. That began in June with a 5.0. So these are, you could call it temporary, but it certainly doesn't appear that way in the real world. Finally, if you look at only core year over year, up 4.6, much hotter than expected. And to find a higher number year over year core than 4.6, you have to go back to July of 91 when it was 4.8. We now have moved up to 1.48 on 10-year note yields. We are at 1.83 on 30-year bonds, of which $25 billion will be auctioned at 1 o'clock Eastern. It certainly is interesting to watch how investors have somewhat shunned the auctions, thinking, why am I going to buy something rallying when ultimately we have to see interest rates move higher and sell off? And what's really fascinating is when prices were going up the last several sessions, pushing yields down, the curve was going flat, bull flattening. Today, interest rates are up, and guess what? The curve's flattening again, a bear flattening. Let's see, what's in common there? Flattening. At the end of the day, short rates are stubbornly high. Long rates are the darling of buying lately. I'm not sure how much longer that will last. And, of course, if we think about the CPI in a different way, as these prices start to move higher, energy really is taking center stage. Joe, you did a great job this morning talking about that. You can't have it both ways. Either you want to go into less fossil fuel or you want to keep supplying enough. At the end of the day, I just keep thinking of one name, and that name is Stephen Chu, President Obama's energy secretary in 2008 with his famous phrase, I think gas ought to go to $9 or $10 a gallon, just like Europe. Why? To make a faster switch over to renewables, which hasn't happened, and the same logic seems to prevail today. Becky, back to you.
So I just want to say thanks to the veterans out there. My father, who passed away about 3 weeks ago, he was a World War II veteran, and a lot of you guys reached out to me with your condolences. Thank you so much. I truly, truly, truly appreciate it. So what happened yesterday? Okay, so again, what we always focus in on here is what the Fed's doing, what the mortgage-backed securities market is doing, because that is the component in this whole equation in housing that it's the biggest component of your mortgage rate. So we really focus in on that area right there. So Federal Reserve is controlling a lot of pieces of the market right now, but what we're mainly focused in are mortgages. All right. So here's part of the problem yesterday. It wasn't just inflation's running out of control. We know it. Is it going to be transitory or not? I don't know. I think a big portion of it is going to be. I talk with manufacturers all over the country, people in the housing business, everything of that sort. Some are saying, Dan, it's here, in pricing and labor and so forth. But a lot of that component is, and they agree with me, is oil, because it takes up so much, or it's used in so many products. So oil is going higher and higher and higher, and that's creating a big piece of this mess. But only time is going to really tell. But let's focus in on yesterday's events. So some of the things that happened yesterday, let's kind of pull that curtain back, is the concern with inflation is what the Fed's going to do. What are they really going to do? Well, they announced last week that they're going to taper, and we discussed the tapering, but they're going to do it for 2 months, and then they're going to reevaluate. So keep that in your thoughts. All right, so the next thing is, what did Powell learn from the past Fed mistakes on guiding the U.S. out of a recession? So what happened back when, just several years ago, is a person named Ben Bernanke. He was in charge of the Fed, all right? And what he did, well, let's get to that. That's the prerequisite of this. Federal Chairman Bernanke was the previous Fed chairman, and Chairman Powell is the current one, all right? So Powell also seems to have taken a lesson that a key step to avoid a rise in bond yields is making sure that the market doesn't try to guess what interest rates will be hiked after tapering, or when interest rates will be hiked after tapering. Well, Ben Bernanke addressed interest rates a month after he first brought up scaling back on bond purchases. So let me tell you what happened. When I'm showing you the charts, and I'll show you again, when the Federal Reserve is tapering, meaning they're going to start buying less of mortgage-backed security bonds, it means the demand is going down, all right? So what happens when that happens? Well, prices drop until it hits an equilibrium. Well, when prices drop, yields go up to attract more investors, okay? So investors are waiting for the yield to drop until they're comfortable, and then they buy, all right? So you just found from there, when the Fed starts to taper, prices will start going down, yields will start going up. What Ben Bernanke did is right after he tapered, he increased rates, which was a double whammy on rates. So rates artificially went up truly when the Fed started tapering, and then he also increased them. So they had a multiple effect there. That's basically what they're talking about here. So again, the concern is you don't want the markets to guess, because they always guess, some guess right, some guess wrong, but it always, in the long run, it'll equal out, but the swings, the variance, the overreactions are there. And I'm going to show you, again, like I said, last week, Powell could not have been clearer on his point. The Fed chair said raising interest rates was not even a topic of discussion during the last FOMC meeting. So what they're saying is they're tapering, but the good thing is they're only going to taper 2 months, and they're going to reevaluate things. At that point, I don't really know what's going to go on, because I kind of think it, but I'm going to hold that to myself right now. I'll let you know my thoughts maybe tomorrow or first thing in next week. I think they learned their lesson. They're not going to taper and raise rates. Okay, so that's the first thing that I want to address. But again, yesterday's concerns, all the headlines had inflation. But it's another thing. Again, the markets don't like guessing or uncertainty. Well, the next thing is Federal Chairman Powell is up for reappointment by the president. Well, there's a lot of stuff coming out saying why Federal Chairman Powell must go. So now the markets are saying, we know Federal Chairman Powell's stance, as we can see right here, but is he even going to be the Fed chairman down the road or here soon? I don't know. I think so. I think he's doing a fantastic job. That's my opinion. But that's where we're at right there. So the next thing is, what's causing a lot of this inflation fears? Well, fuel and housing costs boost October's inflation numbers. All right. So the Dow dropped 240 points yesterday. NASDAQ fell 1.7 after hot inflation data came out. So let's dissect this area. Stocks retreated Wednesday after October's consumer prices readings showed the biggest annual jump in more than 30 years, triggering a spike in bond yields. Okay, so the prices started going down, like I said, driving up yields to try to attract more investors. So you can see bond yields are spiking. Okay, that's right there. The yield on the 10-year Treasury, which is trending lower in recent weeks, jumped about 11 basis points. All this is going to tie in at the end, I promise you, folks, when I go over the rates with you, because I had several phone calls this morning from people, and I'll explain that in detail here in a second. I'm not trying to deceive you, but rates spiked fast. Yesterday, my whole team spent the whole afternoon locking in every client we had as soon as I knew there was going to be a bump in rates, and had the whole team here, and we locked in over $15 million worth of business. So thanks to you guys out there. So that's other things going on behind the scene. Also, Chinese company, huge, the biggest real estate firm in China, looks like they might be defaulting. They just missed a $148 million payment to their shareholders. So all of this, the PPI numbers coming in this week, the CPI coming in this week, Fed tapering has been announced. Will Federal Chairman Powell still have a job in a couple weeks? What's going on with all this other stuff? Guys, it's a debacle out there. So that's why you need to, if you're looking for a mortgage, you're in the mortgage business, you got to focus in on these things on a daily basis. Not even daily, hourly basis, minute by minute. All right. So here's where rates went. All right. Look at this. This is crazy. All right. So these are not my rates, folks. A lot of people are like, Dan, you posted your rates. These are the national averages. What I'm saying to you is this is where you're looking at. If you're higher than this, lower than this, it at least gives you a trigger point. At the end of the video, I'll show you, if you're in the mortgage process right now, how you can send me your offer letter from the other company. Let's beat it. Let's go out in the market and try to find you a better rate with lower fees. And this morning on my first one, I was able to save the client $4,000 in costs. But let's go over the rates. 30-year fixed conventional rate right now is 3.19. The 15-year 2.55. FHA 2.68. Jumbo 3.1 and the 5-year ARM 2.88. What happened over the last day? Well, rates went up 0.11 on the 30-year, 8 basis points on the 15, 6 basis points on FHA, 7 basis points on Jumbo, and 13 basis points on the ARMs. So you could see the other day we had 3.08. I had a client ask me this morning, God bless you, ask. I want to be completely transparent. It went from 308 to 319, and this probably is going up even a little bit more once all the banks adjust. Just so you guys know, today banks are closed. I'm here doing videos to keep you caught up on the markets, what's going on in the mortgage industry. Right now, here's where the markets are closed, but here's yesterday's debacle. Look at this. Look at this. All right. We dropped over 70 basis points. Now, is this catastrophic? No, we're back to where we were, a week ago or so. And I even said, guys, this is overbought. I watched my video from Tuesday. I said, we're overbought. I see us trending in this area right through here. All right. We dropped below that. Again, we overreacted. I can almost assure you we'll probably be right about in here tomorrow. Let's see if that comes true. Well, I'm going to predict 102.6 unless some other crazy information comes out. All right. So what does that mean? Well, it means the rates might come down a little bit. We might be looking at 3.15, 3.1 maybe. I don't think that far down. But rates, I'm predicting them tomorrow to ease up a little bit. So if you have an LE out there, please be cautious, or if it's past dated. Again, if you have a loan estimate from a week ago, you need a new one. Look what rates did in just one day. They went up 11 basis points in one day. All right, the economic information that came out this week, devastating. Producer price index. This is basically the gauge of inflation on the producer's level, up 6.8%. Right in line with expectations, but that's up there, guys. Now, the consumer price index, this is what you and I pay, or how we get affected year over year. It came in last month at 5.4. The expectations was 5.3. We were at 6.2. A much hotter number than expected. One big piece of that is oil, and oil is going crazy. So that's that part of it. All right, If you'd like to reach out to me, here's those that I need. I'm going to do a forbearance video here shortly because we're now starting to have people reach out for forbearances. There, you have options. I talked to a person recently, and they announced a bank, and I won't say it because I don't know specifically. I actually talked to 3 people that had the mortgage with the same company. That mortgage company is requiring them to bring their account current. I had a client last night text me late at night. They're like, Dan, I need to do something because I don't have 20 grand to bring my account current. That's what I need. If you're in a forbearance, just call us. Let us explain your exit strategy. Review what your rate is now versus what we can get you. You might be able to solve all your problems by refinance, but it might not be. There might be other options. You might kick the can down the street, worry about it at the end. That might be your best solution. I'll tell you what I would do personally. So if you're in the process right now of getting a mortgage, the mortgage company has to send you a loan estimate. We call it an LE within 3 days of pulling your credit. I want you to send those to me. I want to be your mortgage consultant. I'm going to go around and look at every option available to you to see if we can get you a better rate at lower fees. And this morning I got the person the same rate, but we're able to save them over $4,000 in fees. I thought that might be the prudent way to go because they're buying a house and they can use that excess money for other closing costs or maybe buy some curtains. Okay, so that's that part of it. If you'd like to reach out to us, if you're trying to build, buy, refinance, get a home equity loan, remodel your house, anything that you have, reverse mortgages are huge. And if you have somebody that might be contemplating a reverse mortgage, but it's like, I don't want to give my house to the bank, you're not giving your house to the bank. These are all areas that we can help consult you in to explain to you the true definition and what truly reverse mortgages are. That's just one boutique service that we can offer you. So I don't want to make this into a commercial, but how do you reach out to me and my team to get help? Ask any questions you got, please go to therateupdate.com. It's going to take you right here. Give us a call at 844-775-LOAN. We're working today, guys. All the banks are closed. 844-775-5626. What a lot of people are doing right now, they're scheduling an appointment. We'd love to talk to you. I share my screens with you. I go over your numbers. I review your credit with you. We do everything. We handhold you through this entire process. If you'd like to just say, hey, I just want your help, Dan. I want to apply online. Just click here. You're on your way to getting help. If you have that loan estimate, like I was telling you, and you want to send it to me, go over to the resource section right here, scan down, and you're going to upload your loan estimate. This is what's going to prompt. It's a secure system. You're going to have to log into it, which is good. In this message section, please give me the story. What are you trying to do? Number 1. The next thing is I need a phone number. Okay. I can email you, but I'd like to do this as fast as I can. If you don't want to post your phone number, God bless you. You have that right. I'll send you a detailed email. But the thing that most people are forgetting, I need to know what your credit score is. Your credit score is a huge piece of this puzzle. So when you give me the story here, please at the end, let me know what your credit score is. So when I'm quoting you a quote back on what I can do, I want to be as accurate as I can. So that's it for right now, guys. I will be posting a video later today. I'm telling you more information that I found out about yesterday's crash. I want to go over some forbearance information, and then I'll answer any questions that you guys might be posting down below. I'll try to maybe answer those today. I'll go through one of my latest videos, go through the comments down below, and we'll read them, maybe answer some of those questions today. So God bless, guys. Thank you so much for watching. I really appreciate it. You guys don't know how much I do appreciate it. So thanks. Look forward to hearing from you. Don't forget to give me a thumbs up, subscribe down below, hit the bell every time I post a video. You get an alert. I'll talk to you soon. Bye-bye.